Good afternoon, everyone. Welcome to Hit the Bid here on December 14th. This is Ty Robbie here with your Week 50 Market Watch. Today we're going to run through our charts and see what happened across the markets over the last week and see what opportunities are waiting for us as we head into Week 50. Let's jump right in here and get started. First up, we got our February live cattle on the board. We did see more upside here across the cattle market last week as we continue to see some constructive bullish action here in the cattle market. Here for this February live contract, we did see this market trading in about a 3-day range here from Monday through Wednesday's action, with prices balancing out right on top of that 50-day moving average. Nice strong finish here on Friday, opened the door to some more upside, which we saw on Thursday with a nice little gap and run higher, pushing up there towards 231.77, which was the high of the week. Made a run towards this gap, but just failed to get any follow through as this market has been pretty extended off of this Thanksgiving week low. We did see this action kind of fizzle out here on Friday as this market did settle back here a little bit, but still trading here in bullish territory as we are at new monthly highs and trading above our major moving averages. Like I said, this market has gotten a little bit extended to the upside here after making about a $26, $27 run off of this Thanksgiving week low, all the way up to last week's high, falling just short of 232. With that big move here over the last 3 weeks, we could see this thing getting a little bit overextended and may need a pullback to offer some buyer support at some lower prices, be able to bring in some extra buyers down here in some of these value areas to give this market the buying support it needs to get another push higher into year end. At the moment, this weak action we saw here on Friday could continue early next week. We'd like to see this market kind of settle back here and find support here in the mid 220s. We want to see the buyers support these major moving averages as we're now trading above them. If we do get a dip to pull back down here into these major moving averages, we want to see how the buyers react. If there is good support here and this market kind of balances out in this area, could be a good spot to start laying the groundwork for some new uptrend positions and get some low risk points here to take this market higher into the end of the year and early 2026. However, if we don't get that pullback, we have seen some pretty decent strength here in this cattle market over the last 3 weeks. If they do just continue to push with some bids above 231 early next week, look for the bulls to try and close that gap and get to moving higher. Once we're able to close that gap, it should be pretty smooth sailing for the bulls, and they should get this uptrend rolling and just keep drifting higher, as this cattle market will start to eye those all-time highs once again if we are able to push above that gap and get this big picture uptrend underway. Next up, we got our March feeders on the board. Similar action last week. We did see start out the week with a 3-day balance period. Monday, Tuesday, Wednesday's action hanging out here right on top of that 50-day moving average before that strong close on Wednesday set us up for the gap and run action on Thursday. Thursday's action rallying up there towards 339, pushing into that gap a little bit, but once again, like that live cattle market, we did see Friday's action settling back. However, still trading in bullish territory above our monthly highs and as major moving averages. At the moment, this market once again is also pretty extended after dipping down here below $3 and rallying all the way back here towards 340. This feeder cattle market is pretty extended as well. Overbought territory up here could push back a little bit and see if this market can find support down here near 330 and into the 320s. We want to see the buyers step in and hold the line at these major moving averages, find support either at this rising 20-day moving average or the 50 here as well, like we saw early last week. If the buyers are able to step in and buy any dips that we see early in the week, we could see a good low risk point to get involved and see this market kind of turn higher into year end and early 2026. Dips will expected to be buying opportunities here as we are trading in new uptrend territory. Look to see buyer support here before getting involved. We want to see a nice line being drawn in the event of a pullback before we commit. We don't want to be jumping in front of this thing as we could see a little bit of volatility if we do start to trade back down below these moving averages. But we still expect to see good buyer support around here, and we want to monitor the situation and have the best risk points to trade around before getting involved to the upside here. However, if this market doesn't continue with Friday's action and get a pullback like we're hoping, we could see a little bit of more momentum with some bids above 339.17. If this market is able to get early bids rolling above that point, that bull pivot, we should see it continue to chew through this overhead gap, try and close that gap over here right around 345. And once we're able to do that, should be smooth sailing to the upside here as the bulls will try and push into the 350s, 360s, and get this big picture uptrend rolling. Everything's looking pretty bullish here. Just seeing some near-term overbought conditions, so we could see a little bit of a dip and a pullback here over the next week. But we are seeing good signs of life from the bulls, and we could see some good buyer support come at some point in the week ahead. Look for the bulls to continue to attack this upside and try and get this uptrend rolling and take this cattle market higher into the end of 2025 and start of 2026. Jump over to the corn futures now. This corn market has been pretty sticky here, around $4.50 over the last couple months here. Last week is no exception. We did see this market just chopping up here between the 440 and 450 range all week long. Nice big breakdown here on Friday, however. This market finishing just right above the 440 line on pretty heavy volume. Still trading inside the range though, however, so we expect to see this choppy range-bound action to continue into week 50. If we want to see a directional move, we need to get the bears to break down below 440, get a close below that, and this rising trend line here. If we are able to get a nice strong finish down here below that, or a weak finish, that is, for the bears, if they're able to push through these lines, we could see this market start to shed a little bit here and head lower if we do break this uptrend line and get a close beyond the edges of this range. However, in the meantime, still expect to see these range lows hold and continue chopping sideways like we have dating back to October here. This 440 to 450 price point has been pretty sticky. Each time we visit the edges, it usually gets rejected, so we expect to see that range-bound action continue until we can either clear beyond the lows here at 440 and this trend line down here below us, or get a rally here and get a close above 450 to 457. So in the meantime, we expect to see that choppy range-bound action continue until we can get a break beyond the edges. Over to the crude oil market now. We did see more downside last week after week 48 closed on a high note. We did see week 48's finish here on Friday, testing that 50-day moving average. But like we saw throughout the month of November, we continue to see good rejection off of that 50 from the bears and push this market lower. Hit the ground running here on Monday with this action selling off right off that 50-day moving average and selling lower all week long. We did see a push all the way down here towards $57 before balancing out with an inside day on Friday. This downtrend still remains intact. Very little volatility to be expected still in this crude oil market, so expect tight daily ranges and a nice slow steady bleed lower. With offers down here below 57, we could see it start to push back down here into the 55 to 56 area and test some of these long wicks that we've put in from the yearly lows. Look for this market to continue to put pressure down on the mid-50s here and keep selling off with a nice slow steady bleed. If we do get some bids above 58.19, which was Friday's high, we could see a little bit of a relief rally here, as this market should climb back up into these moving averages and try and find some more sellers back here at this 50-day moving average and retest that $60 mark, as this has been a pretty comfortable spot for the oil market as well. Directional movement still favors the bears with a nice slow steady drift lower, but look for this market to continue with very little volatility and tight daily ranges. Could be some choppy action here as we trade below $60 and the mid-50s here. And next up, we got our equity indexes, starting off here with the S&P. This market continuing to send mixed signals. We've got some relative strength in certain names and selective sectors, but we do have a pretty mixed bag out there amongst the big Meg 7 stocks that make up the bulk of these indexes. More weakness in the semiconductors and tech sectors, so that's what's going to be keeping a weight on this NASDAQ and why we finished so weak here on Friday. Had some bad earnings from Broadcom that pushed this market lower, as well as the entire semiconductor sector, really weighing on the NASDAQ at the moment. This market did break after trying to find some support around the Fed day last week, but a nice weak day here on Friday on heavy volume kind of has this NASDAQ index feeling the weakness and feeling the heat a little bit. We are still trading at this 50-day moving average. If we do get some early breaks down here on the NASDAQ below the 50, try and lighten the load here in that tech sector or some of those semiconductor stocks, as they could continue to shed and move lower. Still yet to get a follow-through day here, either on the S&P or the NASDAQ, as this market is still not showing real clear-cut signals to the upside, but we are seeing some good support over the last couple weeks right here around 6,800 on the S&P. We want to see that 6,800 line continue to hold and good support from these rising moving averages as they continue to climb up into this area. At the moment, the sign of light here in the stock market is still the Dow index. This is where the relative strength is going to be in those banking and finance sectors, industrials, and other Dow stocks are going to be where the strength is. We want to continue to have exposure here where the strength is and lighten the load where we're seeing signs of weakness, like in the NASDAQ. Encourage everyone to remain long and strong here, as we did get a follow through day back here on the 3rd of the month, confirming the upside in this Dow index. We did see good support early last week, midweek at that 20-day moving average after the Fed day on Wednesday, and a nice strong push here throughout Wednesday, Thursday, and Friday's action to new all-time highs on the Dow. Look for the strength to remain here in the Dow index. We'd like to see some more support over in the tech sector to try and bring these other indexes with it and keep this big picture uptrend rolling. We want to continue to see the S&P hold the line here at 6,800 and make sure that our NASDAQ continues to find support here around this 50-day moving average. If they're able to keep prices here above the 50-day average and 6,800 in the S&P, as we move into week 50, we shouldn't be worried about much and see this uptrend continue to try and unfold. See that Dow continue to lead here and keep pushing in new all-time highs, and we should see this uptrend continue. Just have a couple lines in the sand we want to continue to be cautious of. If we do start to trade below 6,800 and the 50-day here on the NASDAQ, we're going to encourage everyone to start to raise cash a little bit and get defensive again, as we could still be in corrective territory. But until we see those levels break, there's really nothing to be concerned about. Let the market prove that it's going lower, and in the meantime, we're still finding support in the right areas. We just need to see those lines break before we can start to get defensive here once again. But in the meantime, stay long in those sectors and areas where there's still some relative strength, like the Dow stocks, but continue to urge caution. We are cautiously optimistic here across the tech sector and the NASDAQ that they will continue to find support, just dealing with some volatility around the earnings season recently, so just need to clean up a little bit of that mess. But if we continue to find support early next week and get some bids rolling back up here, we want to see the NASDAQ trade above 25.8 and the S&P get back above 6,900. Like we did briefly see here on Thursday, but the bull pivot line for the S&P for next week is going to be 68.40. As long as we're trading above the 20-day moving average, I encourage everyone to stay invested here and just continue to defend some of these key levels here as we head into week 50. We do have a pretty busy news week with some non-farm payrolls. Retail sales, unemployment rate all coming in here on Tuesday, and then followed by jobless claims and CPI data coming in on Thursday the 18th. So definitely going to be some events that could lead to some volatility here in the week ahead. So we'll continue to monitor those situations, but as long as these equity indexes are holding these lines, I encourage everyone to trust the process and stay long and let this market continue to push up towards those all-time highs. Continue to defend the line here at the 50-day moving average in the NASDAQ and that 6,800 level here on the S&P. As long as those levels are able to hold, we could see this market continue to rally up towards those all-time highs. That's all we got for this weekend. Appreciate everyone checking in today. We will catch you tomorrow for closing comments. Thanks.